Hey, it's Bill Gross, the LAProbate and I continue to interview real estate professionals and services that are important to us as real estate salespeople and investors, wholesalers. And today I have Benson Juarez on the call. So say hi, Benson.
Hey everyone, thanks for having me.
Great. And give us just a quick snippet. If I said to you, what do you do for your business? What is it that you do to help people in the real estate space today? How would you answer that?
Well, I've been in the business for many years. It's approaching 20 years now. Been done everything from lending money, which is my very first kind of taste of the real estate space, to I'm currently a licensed agent with EXP in Denver, Colorado. I'm an investor, and I'm one of the owners of a software platform called Privy. It's a real estate investing software where we help real estate agents and investors more easily find and analyze deals by leveraging different data sources, including MLS data that we source directly, public record information, so you can get a complete picture of properties and people who are involved with those, as well as kind of some like off-market opportunities. So, we've been doing this for close to 10 years with the technology itself. We're very regionally focused based off of our MLS contracts, but now we've launched nationwide. And I'm really excited to be able to help a lot more agents and investors be more effective in their business.
Great. So let's talk about Privy and how it can be a tool to help real estate salespeople and investors. Just real quick, if I was to find it, what's the website? How do you spell that?
It's getprivynow.com. Getprivynow.com. It's not privy.com. A lot of people slip in and they go to privy.com, which is kind of like an email service. That's not us. I wish I had that domain, but I don't. Um, so
Okay,
getprivynow.com.
fantastic. So I'm a real estate agent and I'm selling some houses. I want to do more business. I look at your website and I see the data offerings. What would be a method for me to use the product or use the service to help me generate some additional business, particularly listings in this market?
Well, it really depends on your approach. So our system is kind of investor focused, and there's a segment of agents out there that say they're investor friendly or they're investor focused, and there's some debate on what that really means. There's some kind of classes and CE courses people can take on what it takes to work with an investor, but I really think that most agents fall short of what it really takes to work with an investor. There's a lot more going on than just sourcing leads, right? Yes, you want to be able to provide deal flow to your clients, but it's also advice, right? Being actually a trusted advisor in this process. And it's not there yet, but this is somewhere where we want to go as a company and really arming and agents with the best data and information so they can be more of a trusted advisor, almost like a financial advisor would be. Financial advisors have to get a series 6 and 7 and some of these other things to be able to do the business. There's nothing like that for agents. Agents can really just go out there and do whatever they want. So our long-term goal is to provide the data and the analytics to help inform agents on better ways of working with their clients, but also, come up with some sort of a certification that would allow them to say that they've got this training. They know how to run the numbers on a fix and flip scenario. They know how to help an investor determine if a specific property is going to give them the best ROI on a rental property or a short-term rental. So this is where I think that we can help agents be more effective with that. When it comes to the data that we specifically have, there's opportunities for listings, but it doesn't start that way. Basically, what we do is we create an environment where agents and investors can work together and be on the same level. One of the main problems that we've learned from being agents and working with agents is that it's a really kind of lopsided relationship where the agent is doing the majority of the work. They're searching for the deals, they're running the numbers, providing all the deal flow, and the investor has kind of been, more passive, right? Just relying on the agent to do every little thing, and that's created some animosity, believe it or not, in the investor world, where agents don't like working with investors and investors don't like working with agents. And it's a really weird thing. I've actually had investors tell me that they hate real estate agents, right? Really bizarre sentiment to have, where this is a space where people need to work together. So investors in some scenarios avoid working with agents. So with our platform, basically what it does is it levels the playing field. it takes some of the onus off of the agent and allows them to work and focus on money making activities rather than tedious tasks of like running comps, right? So part of what we built into Privy is a comping algorithm. So for example, if you're in Southern California, we've got a direct data feed from CRMLS. That data comes into our system, and we leverage that data to basically run an analysis, pull comparables, and build a comparative market analysis on every single property in the market 24/7. So you know the values as is, you know what the after repair value is if you're thinking about fix and flip. We've got the rental data there, so you can see if you can make your ROI work on a rental property. And then we're able to track investor activity as well. So we're basically able to show agents where they should be telling their clients that they should be looking for deals. Because as much as we would love to avoid competition, this is a comparable driven business. So if you're doing anything that's related to after repair value, you have to be where fix and flip comparables are being done. So that's part of us arming our clients with the best data so they have a better approach on where to look for deals, and also advise our clients on the differences between looking for deals based off of convenience, because that's what most investors do. They want to look for deals where they live. Maybe they give their agent their 3 favorite zip codes. Well, a smart agent who leverages our technology will look at those zip codes in our system and say, shoot, Mrs. Johnson, I know that you want to look for deals in these areas, but it looks like you're not going to be able to get the best ROI on your investment in these areas. Why don't we look at these areas over here because of X, Y, Z? So it's helping them be better advisors, giving them the best data, and giving them time back to where they can focus on investor finding deals for their clients, money making activities, and leveraging the automation. Our system literally automates the whole process of finding and analyzing deals, leveraging that data.
Well, there's a lot to unpack there. As a listing agent myself, I work with investors all the time who buy my listings and fix and flip them, or I find other deals and work with investors as well. And so, I do find, like you say, a range of investors, some who hate working with realtors and will only buy off market. But I always ask investors when I meet them, not wannabe investors or maybe first time lookers, but I always ask people who invest and are buying property, throughout the year. My clients tend to buy, 3 to 5 a month to 3 to 5 a year. And I ask those guys always where they find their properties. And what's fascinating to me is 80% are on the market. And we'll say they get from the MLS. Now, maybe they search the MLS themselves. They have a staff member who does it as well, maybe. And or brokers bring them deals that are in the MLS, but help them understand that deal. It looks like it doesn't make sense, but here's why it does. Here's the hidden value. And I would say about 80% are on the market, but it's by analyzing it and understanding the numbers that make sense out of it, versus when agents, investors say to me off market, that's because they think they've looked at the whole market. They don't want to spend the time. And I'm the same way. I've already searched the market the way I look at it. I don't necessarily want to see an on-market listing unless you have some special insider information. But I can see what you're doing is giving the agent or the salesperson the tool to understand the value of that property and then present it to an investor in an informed way, right? That's what we have to focus on.
Mm-hmm.
So I tell salespeople, when you present a property investor, you have to tell them 2 things. One, here's the cost you need to get in the property. And second, here's your return, whether it be a fix and flip, end of the day ARV minus expenses, or a buy and hold. Here's your monthly income, or with a refi strategy or whatever. Those details. So how does this help arm me? I find a deal, it looks like a deal. What are the tools and the data you're giving me on a particular property to help me accomplish those 2 goals? What's my down payment cost going to be, including maybe repair cost? And then what's my return going to be to an investor? How does that help me with that?
Well, I think one of the biggest things that we are able to help agents understand is by giving them that local market knowledge of investor activity. So, if you use our software, and there's a strategy that I've implemented into the system called the reverse REI strategy. This is basically a strategy where you begin with the end in mind and you reverse engineer the process to begin your strategy on searching for deals and what your exit strategy should be. So when you use the reverse REI strategy, you're literally saying, okay, show me where all the activity is, and then show me what the activity is. So I can show you the fix and flip that closed yesterday in San Diego. I can show you what they bought it for, what they sold it for. I can show you their gross margins. I can show you the before and after pictures, so you can understand like what it took, what kind of margin you needed to be able to get to the end product. Things like timelines. How long was it under construction? The days on market, total hold time. What was the time from when they bought it to when they finally put that check in the bank? A lot of investors, and agents, they don't really think about the cost of time. So they say, okay, well, I can probably do that in 60 days, right? And there's no really kind of sense of like, well, how long is it really going to take? Most of the time, they rely on their contractor for how long it's going to take, right? And contractors, I believe, are going to tell you what you want to hear. But we all know that contractors always go over budget and always go over on
Always.
time,
Always.
right?
Every
So,
deal, just stop for 1 second. Every deal
mhm.
is going to cost more than they tell you up front. It's going to take longer than they tell you it's going to. Absolutely.
Right. So that's why maybe you shouldn't rely on their advice on that,
Right.
entirely. Now it's a good
Right.
piece of evidence in trying to determine that. But there's a few other factors like what condition is the house in?
Right.
Right now, if your house is in a similar condition as the flip that happened down the road, and you're using that comparable as basically an example of what your ARV should be, well, it might take a similar length, right? So you can use the other data that we're curating for the agent to be able to make better decisions and better advise their clients. So if the investor says, well, my contractor said it's going to take 60 days, the agent can say, well, here's 3 properties that were fixed and flipped in the neighborhood. On average, they're taking about 6 months, right?
Right.
So we should probably factor in an additional 3 months of
Right.
carrying costs, because I
Right.
know you're using that hard money loan and you're paying 12%.
Right.
If we get that wrong, that's literally the difference between you making money and losing money, just by not understanding the true nature of that market. So
Or
that's
in
one of the really important pieces.
or in a difficult market, you might not get your loan extended, right? In a good market, every lender's extending everything and charging fees, and everybody's glad to pay it. In a downward market, in a tough market, lenders won't give you extensions no matter what you pay. They'll take the property back in foreclosure. And so
Right.
I think a lot of investors have gotten away with that for this last year or two and gotten complacent, don't appreciate how important those timelines are to protect you and to protect your equity.
Absolutely. And then the after pictures too is really important too, because it informs the agent and the investor on what level of construction is adequate for that particular neighborhood. A
Mm-hmm.
lot of investors get in this business because they watch, Flip or Flop on HGTV, and then they think that's reality.
Right.
So they're putting, glass tile and, huge granite islands and waterfalls and chandeliers in their house, when really they should be doing the Home Depot special, right? Where everything's off the shelf, and, and you're getting it, you're nailing it, where you're not leaving money on the table,
Right.
or building too low, right? You want to basically figure out where the bar has been set for that neighborhood, and then you can maximize your ROI.
So, so over the last year, in general, homes went up in California about 20%, right? Just as a round number in most markets overall. So literally that means if you bought a property and spent 8% on closing costs, spend another 8% in the back end on closing costs. If you just bought the property as is and resold to somebody else and you held it for a year on a retail residential mortgage rate, not a hard money rate, you still made money, right?
Mm-hmm.
Or if you did it for less closing costs and less commissions, you're an agent, you do it on your own, you're an investor, and you were able to sell it for sale by owner, or you have an agent wife or something like that, and you do it for half the cost, you could take like 5% of your purchase price and literally burn dollars in the front yard in a barbecue and still make a profit. So my question is, how many deals are there going to be if the market, let's say, is flat for the next 12 months or up 2% or more historical 4% for the next 12 months? How many deals were done in the last year or two that are going to pencil up
Mm-hmm.
profitably in that market versus the market we've just been in?
Well, I think there's two different kinds of value here we're talking about. You're talking about appreciation over time based off of what the market's doing, right?
Mm-hmm.
But then the other side of the coin is forced appreciation, right? Forced appreciation is a fix and flip, right? This is where you're adding value to the home by taking a property that maybe was needs some deferred maintenance. There's some issues with it. Maybe it hasn't been updated for a long time.
Right.
And then looking at an area where there's fix and flip activity and saying, okay, here's what a fix and flip property would sell for. And this is why I think so many investors and agents go sideways is they look at retail and they think that they have to get a discount based off of what the market value of the house is, the retail value, and they'd put out these lowball offers thinking that that's how they make money. Well, that's not necessarily the case. Really, where they can make money is, and even in a flat market, but even more so in a market that's appreciating at, you said 20%, and you add on forced appreciation on top of it, I will pay market value or over market value for a property every single day if I know I can get it at 50, 60% of ARV, right? So this is where the perception has to change in the minds of investors and agents on what a deal really is. A deal can mean a lot of different things to a lot of different people. I could put a property that is a quote unquote a deal in front of 10 different agents, and I'll get 10 different opinions on whether it's a deal or not and why it's a deal. What's the strategy? Is it fix and flip? Is it BRRRR? Right? People who are doing BRRRR don't have to get as large of margins as somebody that's doing fix and flip because
Correct.
they're looking at it from two different financial perspectives. They're looking at appreciation over time. They're looking at deductions on all of the things that come with owning a rental property. They're looking at the rental income, and they're also looking at basically creating a bank that they can borrow from
Right.
and do more deals because they have the
Right.
sweat equity that was created from the renovation.
Right.
So, the options are endless, but a part of that again is looking at what other investors are doing. If you've got fix and flip activity in the area and you can pay market value or over market value in its current condition and still have plenty of margin to get
Right.
deals done,
Right.
then you can make money.
Well, I agree with you. If you can pay with market value and still get 4% cash on cash and then pocket the appreciation in the long run, it's probably a great deal as long as you cover your expenses and cover your risks and things like that. So
Mm-hmm.
that's why with historic interest rates, in the twos, if you can get I remember I was working at Keller Williams Westside in 2010 or 11 when cap rates went below 10%. And it was like a riot amongst the commercial agents and the multifamily agents. Who would ever buy an apartment building with a cap rate below 10% in Beverly Hills or West LA? Well, the answer is today, you get a line a mile long to buy those
Right.
properties at those cap rates, right? So it's all the function of the market. And when your interest rate is now 2%, if you get a cap rate of 4%, then all the money you're borrowing, you're leveraging that right off the gate. You're making profit on that money. You're arbitraging that money, right?
It's true. It's all perception.
Yeah.
Times have really changed. And I think that COVID has been kind of a forcing function for a lot of people and really understanding, supply and demand and getting realistic about what a deal looks like.
Mm-hmm.
In your neck of the woods, because prices are so high, you don't have to have a large percentage of profit to still make money, right? You can look at like the cash return, the
Right.
gross cash or the net profit, and not necessarily calculate it on a percentage, because really what you want to talk about is what's the opportunity cost. Do I leave my money in the stock market and make 2 or 3%,
Right.
or do I put it into a fix and flip or some other investment vehicle and make 2 to 3 times that, but not necessarily where a lot of investors think they need to be in the 15 to 20% range, which is like, in my mind, those are the unicorn deals. And then I can look at the data and I can show an agent 10 deals in your market where the investor bought it at 75, 80, 82% of the after repair value and still added all their costs on top of it to be able to do a fix and flip.
Right.
Like, the data is there. It shows that investors are now basically retooling in their mind what a deal looks like, because if they don't do deals like that, they're not doing deals.
Right.
They're basically, their money's in the bank earning whatever interest rate it is at that rate. Or, and this is where I think it gets interesting, is they're looking at stuff outside their local market. So if you can't make deals work in San Diego and Southern California, well, why don't you take that $1 million and buy 10 properties in Indianapolis or Chicago,
One of my
right?
best friends did that in Kansas City, so I'm on board with 100%. I think in all industries, one of the changes of the internet across every industry is everybody's under pressure, everything's competitive, Uh, every industry has to do things they never had to do before to be profitable. One of the
Hmm.
greatest books on business was In Search of Excellence on the greatest American companies. And it said, well, the reason why McDonald's is successful is all they do is make burgers, fries, and Cokes and malts. Not true anymore. To be
Right.
competitive, they have to offer salads and fruits and all kinds of other stuff. Every business like that, realtors have to work harder for deals. I work twice as hard to get listings as ever. They're easier to sell today, but I have to work a lot harder. If I don't like that, it doesn't really matter. It just means I don't get business. So investors will say, well, I don't want to have to work that hard. Okay, then I guess you're not a fix and flipper. I guess you're not an investor because that's the business. You don't have to like it. You just have to do that. I think you're 100% right. You got to look either deeper in your market or nearby your market or in a whole different market to find deals today.
Yeah, or again, changing the perception, right? A big thing now, and it's been big for a while now, is ADUs, right? Like when I lived in LA back in 2012, people didn't talk about ADUs,
Right.
but now that's a big thing. So it's like, what's the highest and best use
Right.
of a particular property?
They
Maybe
all
it's adding
changed.
an
Every
ADU.
property changed, right? I mean, every property
Yeah.
now has the right to add an ADU, whether it's economic or not. That they're not clear on. But you're right. Every property in Southern California changed because of that.
Right, and it creates opportunity. So what's the next thing they change, right? What's on the fringe? And this is where I think investors and agents can start to look at new opportunities. And I think that, and you were talking about listings, and this will touch on that, is that because of COVID, there's now going to be new opportunities for the investment community. And
Right.
I think a lot of it is going to be the shift of assets from people who own them now to the people that will own them because of the moratorium and the forbearances. So there are many landlords out there that haven't been getting rent for upwards of 18 months that are rethinking how nice it is to own property.
Right.
Right. So I think there's going to be a big shift in assets, and there's going to be a good opportunity for people who don't have assets now or want to invest in them because of the moratoriums, right? They're having to change their asset class, and maybe they're moving from doing holding property to either flipping or doing short-term rentals. A lot of people are now moving toward that,
Yep.
away from the long term, because the
Yep.
moratorium doesn't apply to any of that, but they still got the asset.
Right.
So how do you make that with the highest and best use right now of a rental is probably short-term rental, not
Right.
long-term, right?
Right.
There's no protections there.
Right.
So what I would tell agents is look at absentee owners, look at people who have owned properties for a good period of time, to probably 10 years plus, and you're going to find an opportunity there for listings. You're also going to find an opportunity there for getting deal flow for your buyers. And then you could, insert yourself in the middle and get sort of a commission. But some of those more distressed seller situations are going to be really good opportunities for agents and investors. The other one is tax sales, right? So with the forbearances, they've been protected from not having to pay their mortgage, which is the principal and interest. But there's two things that aren't protected in that payment: the private mortgage insurance and their taxes.
Right.
Taxes aren't getting paid if they're not paying their mortgage, and there's no forbearance on taxes. It's
Right.
just what the bank is owned.
Right.
So there's going to be a lot more tax sales that are going to pop up.
Right.
And those three things that I mentioned with respect to um, landlords, absentee owners, that's public record. And that's another thing that we do have in our system is some of those opportunities with vacancies, absentee owners. Have you heard of zombie properties? Have you heard that
Yes.
term?
Well, I'm a probate. I deal with that all the time. Right. That's
Right.
part of some of them are probate or need to be probated.
Right. So for people that don't know, a zombie property is a vacant house that has an absentee landlord or owner.
Or
So
unknown
think
owner.
Right. So think about that person who's in a bad situation where the house isn't rented
Right.
and they're not getting any money, and they're potentially in a bad situation. So this is where I see an opportunity for listings for agents tapping into that market and then finding more deal flow for their investor clients.
Well, I always call selling properties to investors for me is paid business development because if I help you buy an investment for fix and flip, I get some commission dollars. And even if I cut my
Mm-hmm.
commission to get you in the deal, you have to sell it when you've done fixing it up. That's my listing. So I call helping the investors buy properties my paid business development program as opposed to
Yeah.
paying for lead generation. Look, I know we've gone a little bit longer than we planned on, so just I want to wrap it up. Obviously, people can get in touch with you or about the product. The website is getprivynow.com, GETPRIVI1V, now.com, getprivynow.com.
It's
And so
Privy. Sorry to
I'm
correct
sorry,
you.
PRVY. I'm
Privy.
looking right at it. Get privynow.com, GETPRIVYNOW.com. And I see on there you have a 30 money back guarantee. So try the product and
Yep,
make it work. And if not, and then I imagine you must have some resources to help new users figure out. Do you do any kind of webinars or videos? Is there some resources to help them
we do.
acclimate?
Yeah. So I'm really hands-on with my group. So, it makes no sense in my mind to sell you a piece of software and then disappear into the night. Like, I want to turn you into my next testimonial. So I do 2 live training sessions per week,
Oh, wow.
Monday nights, Thursday afternoons. Those are live. Anybody can come. It's really hands-on. It's a live Q&A, and we work through people's specific scenarios. And we're always adding in more on-demand training, so a bunch of videos and tutorials, and it's just all the information is there. I just think for agents who are looking to work with investors or already are, like, this can really change things for you. This is the ability to basically help yourself differentiate and create a value proposition that's different than the average agent out there
Mm-hmm.
who's got 20 different certifications on their business card, which means they don't do anything well.
Correct.
Right. So if I have any advice for agents that are looking to do better in the investment community, it's number one, get on board with the data and find a way to differentiate yourself
Right.
from the pack and really become that trusted advisor. Figure out how to run the
Right.
numbers on a deal.
Right.
Understand your local market based off of investor activity. Don't just be that glorified Uber driver who's just showing houses and not knowing whether or not they're going to be a deal. Because if you sell a house to a guy or a gal and it's not a deal, well, you're no longer their agent, but
Right.
now that person is talking to their buddies about
Right.
this lemon they just bought from you.
Right.
So make sure the numbers work. We can definitely help you with that, and I would encourage you to try it out. And give me a call. All my information's on the website. Privy may not be for you, but I believe that I can certainly help you move your business forward and be a better trusted advisor for your clients.
So if you're watching this on YouTube or Facebook or LinkedIn, down below in the notes, there'll be the link to getprivynow.com as well as a phone number to reach Benson. And then I'm sure, like he says, he has other resources as well. So if you get the product, it has a free 30-day money back guarantee. I'm not an affiliate. I don't get a nickel for this. I just want to see my real estate agent colleagues in this industry become experts, create value for the customers, improve the relations we have with the industry. So that's all it's in it for me, is to help you that way as also. Benson, on behalf of the people who watch this, thank you so much for being on my interview today and sharing your information. Thanks for sharing the product. And I think most importantly, thank you for working so hard to raise the value we as real estate salespeople bring to our customers.
Oh, it's my pleasure. I love doing it. Thank you, Bill.
And with that said, this is Bill Gross. I'm the LAProbateExpert.com. I have a real estate investment focused call every Tuesday, 3 p.m. It's realestateinvestingzoom.com. And you can go there and sign up and register for it. It's also on my social media, YouTube channels, and things like that. So look forward to seeing you. And as always, please make this day